Today I'm going to bust a common myth. Low risk to reward is unprofitable and swing trading doesn't work. I would argue that scalping is probably the easiest way to lose money in the market. But if other people can show these regulated broker statements, then we'll see. As you can see on my screen, we've got a $36,000 week in the market, $36,000 of wins, $5,900 of losses. I ended the week with $31,000 in profit. As you can see, $1,000 of that went to commission. So we ended up at about $30,767 for the week. This is on a live regulated broker with IC Markets that I have absolutely no affiliation with, no partnership, no deal. This is just my live trading account. The majority of that whole week was made on this one GU swing trade, which actually was held for 11 days. Now, this is one of the longest trades I've ever held. And the reason I held it for that long is because I'd been predicting this move for a very, very long time. This was a very low risk to reward move. So I'm going to be showing you in this video how to turn a low risk to reward swing trade into a very, very profitable trade in which you can actually scale in multiple times. So the common misconception is you're swing trading, you can only take one trade a week. Although I am trading a lot less frequently than scalpers, I'm taking one good shot in the week and I might be scaling in multiple times during that. Now, when I scale in, I actually believe and I have conviction in where the market is going because I start off with my weekly analysis. When I've done my weekly analysis, what is the simple factor of what trading actually is? Do I believe that price is going to go higher or lower? Now, I believed that GU was going to go lower, as I did for the last week or 11 days I was holding the position. So 11 days previous to when I actually closed out the trade. I was believing that GU can hit this very, very easy common draw on the daily and weekly time frame. So the simple person says, why don't I just sell it, have a stop loss and hold it? Now, the overcomplication is, if I can just do this multiple times on the 1 minute throughout the whole week, then can I not just make more money on the actual trade? However, you've got more room for error, and that is the one thing that traders never think about. Yes, it's very, very easy to win. It's also very, very easy to lose. So you don't want to rack up continuous losses again and again and again and again, catching what you actually deem to be a very, very simple move. You want a GU to go lower for the whole week. You want a DXY to go higher for the whole week. Instead of looking at every single candle that happens in the whole week, why not just take one position and hold it for the whole stretch of the actual market? In reality, this is a very, very simple trade. I could explain this to a 2-year-old and they'll probably understand what I'm actually doing. I sold GU, I held it until my target, and then I closed out the trade. Many people could replicate the actual trade. However, what many people could not replicate, and this is what I'm trying to teach you in this video, is could you hold a trade for 11 days without being impatient and closing the trade? Could you actually fathom seeing drawdown periods in a swing trade? Could you fathom that price has not taken 39 seconds to actually hit your take profit? This is the problem with traders in today's world. It is very, very easy to win, but it's not very easy to be a loser. I commonly take these winning setups that look the same every single time. I also take losing setups which look exactly the same as the winner. At the time I've recorded this video, in the previous week that I just had, I was running $16,000 in live profit on a running trade, which I was looking to close out for $30,000 to $40,000. I actually ended up closing that trade at only $2,000 of profit. That obviously is the cost of being a winner. When you're a winner, you have to make these decisions. If I was to complain about a trade like that, where I've actually only taken $2,000 from a position that was actually running $16,000, then would I not complain about this week where I also made $30,000? Because in this exact trade that you're looking at, I actually was up $14,000, $15,000 at one current point in the trade, and it reversed all the way down to $6,000. I still had the exact same problem at that time. Should I close this trade? I was just up $14,000. Should I close the trade? Now I'm only up $5,000. What if it goes lower? What if it goes lower? And guess what? That's the cost of being profitable over a long period of time. I ended up not closing that trade. I made $18,000 on this trade. And then the next trade that I took on Euro, I also made around $17,000. I also took a short loss of about $4,000 on the trade. So my actual total of the week, as you could see it, I showed you my actual broker. That was IC Markets account. This is a kind of breakdown of why swing trading actually works, why it's easier to just take one shot. However, it's very easy to say it. Most people can't actually do it. Most people can't hold a trade for 11 days. Most people don't know how to scale in. Most people are impatient. So anything that you see on the internet and you think that you could do this yourself, I actually would like you to try and do it for yourself. Swing trading, in my opinion, is probably the thing that carried me to profitability. But did I have to overcome and master my emotions first? Did I have to understand what it feels like to hold a losing position first? Yes, that is actually the essence of what swing trading is. You have to obviously be very, very patient in this game. And let me just give you one idea before you're still thinking, should I swing trade or should I scalp? Would you rather just take one trade, not mentally exhaust yourself and burn yourself out? You're either going to lose or you're going to win. If your bias was right, you win. If your bias was wrong, you lose. It's very, very simple. Or would you like to potentially have the right bias and be stopped out 5 times, and then you're mentally burnt out, you're mentally drained, and then you finally take a winning position and you don't even know if you can hold it? This is the problem with scalping. Now, before I end this rant, I want to say one thing. It is possible to be profitable as a scalp trader. However, most people will never actually get there because it is more difficult for your human mind and your human emotions. So, would you rather do something that is easier for you, easier to replicate, and you only need to take 1 to 2 positions and just get good at reading bias, or something that you think that you're playing Call of Duty and like a scalp champion, and you're sitting there on the chart all day, all week, and you're exhausting your mind and your brain just to prove to people on X and TikTok that you know how to bottom tick the NASDAQ. It just does not make sense to me, but obviously each to their own. Anyways, let's break down the actual trade. It started on the 17th of October, and on that day, we had a very, very nice release of price. As you can see, here are the timestamps. 4:16, this is Dubai time, obviously, so it was about 12 p.m. in the UK at this time. And I'm looking at ending the week for myself as in terms of intraday trading. However, my swing trades, they could be at any point in the week, because what is the actual reality of a swing trade? Whenever you enter a swing trade, you're not expecting it to play out in the next hour. You're not expecting it to play out in the next 2 or 3 hours, or even till the end of the day. It's most likely a bias that you've got for the next few weeks, or the end of the week, or something like that. It could even be long-term, like 3 months, 4 months, whatever. At the end of this Friday, or during this Friday, I'm saying I honestly don't think we could have asked for a better Friday range. This is looking insanely good for swings next week. Excited to drop the outlook this weekend. And I'm talking about, this is the prime manipulation. This is the perfect time. The market decided no one would buy DXY now. And as you can see, this is a DXY daily chart, and I'm showing my students at this point, everyone wanted to buy on DXY on the daily. This is how the market works. Everyone wanted to buy here. They wanted to buy here, and it didn't happen. The market went lower and lower and lower. And this is what I like to call manipulation. I mean, many people call it the same thing, but manipulation is the point where absolutely nobody would want to buy anymore. Think about Bitcoin. Everyone wants to buy. They want to buy. They want to buy. As soon as price actually makes a retracement, nobody wants to buy. And this is how the market moves time and time and time again. Everyone was looking at DXY long bias for days, for weeks. DXY continuously was going up for the weeks on end, months on end. Finally, we have one short-term retracement, and suddenly nobody wants to buy DXY, and DXY should be a sell. This is the point that the market usually actually makes that long-term buy, because the market reaches a point where most buyers, most traders in general, are just exhausted. They're thinking, okay, well, now DXY is probably actually a sell. And if we look at the DXY chart, I want to show you, I've replayed it to that exact point so I could show you what we look like in the market at that point. We have been in bullish structure for the last few weeks. As you can see, from the 17th of September, we've been in bullish market structure. We continuously are respecting bullish arrays. We come into this fair value gap, we trade higher, we expand higher. And then again, over here, we make relative highs over again. Market does the exact same thing. Everybody at this point, I mean, it's very easy to be thinking in hindsight all the time, but the reality is everyone at this point in the market thinks that price is going to go even higher and take out this high over here. And obviously the market doesn't do that. What does the market do instead? It pushes out sellers once again. We want a DXY to go higher. Okay, well, why doesn't DXY go higher from here? It doesn't go higher from here. It goes even lower. It goes even lower. And I actually have a trade breakdown from this exact week as well, where I did the exact same thing that I did in this week. Exactly the same concept. And I called it at that week as well. This is the point. Nobody wants to buy DXY anymore. DXY has a very simple bias. We've got highs over here, and I was looking to trade towards them. At this point, I'm in the market over here. And even me, I'm thinking, okay, I'm in a buy over here on the daily time frame. And DXYs went even lower. And then over here, it's chopped higher, it's chopped lower. This is the point that people genuinely start to think, myself included, I'm like, okay, I'm in this trade. When's this move actually gonna happen? And then as you can see, the move actually happened and I ended up catching a brilliant trade, which you will see in one of my videos. That was the previous week, but I'm trying to explain in this example that the market is constantly repeating the same patterns again and again and again. It's not that the patterns are hard, it's about being afraid in the moment. And psychology is more than just strategy. Psychology is actually looking at the strategy in real time and understanding if you are letting your fear dictate what you actually believe that the market's going to do. The market it works off of fear and greed. And at this point, as you can see, every single time we're having these large expansions, it doesn't matter if it's bearish, bullish, on the daily time frame, you can see it time and time again. We're going to have pullbacks. Now, the funny thing is when people draw a chart, they draw it like this with expansions, retracements, expansions, retracements. And I find that very funny. When we're looking at actually drawing a chart and showing an example to someone, you'll always look at a chart like this. Everyone would say the same thing. However, when you see it in real time, this is when the human mind is actually confused. So we just talked about, if we were drawing a chart, we would draw it like this, just in general. Now, when you see it in real time and you're seeing the retracements, this is when, and I'm telling you, I was looking at the absolute panic on Twitter and just throughout everywhere that I was looking at online, people are really panicking at this point. DXY is gonna go lower, DXY is gonna go lower. This is the point where you're actually looking from a logical perspective. Doesn't matter what anyone's saying over here. We're just having a retracement. We've got higher targets that we could be looking at. We have relative highs over here. Genuine order flow right now is bullish. We are continuously taking out highs. There's no reason for us to sell until proven to sell. And at this point, we've not taken any major lows. We're just having a retracement. So most people are panicking out of their mind at this point. And I've said live in the outlook, I believe that this is manipulation. This is a point we're probably actually going to get that move that people thought we're going to have here, that move that people thought we're going to have here. We've just not taken enough people out. I think enough people are scared now. Enough people don't really think that DXY is going to go bullish now. This is probably when it will happen. One of the best indicators that you can use for yourself, obviously don't do this every single time because there could be a point where the general consensus of the market between people is just correct. However, one of the key factors that I like to look at is when does the market genuinely exhaust people? When you can feel that and you're looking at a bias that could very be possible, you could see the exhaustion in people from the weekly candle, from the daily candle, and that is most likely when the expansion actually happens. With that being said, take a look at this clip from my weekly outlook and you can see how I actually planned the trade. Welcome to the weekly outlook. It is the 20th of October. DXY did not go for the high, which was fine because we expected that we will have some sort of manipulation before we go high. By Wednesday, I think, okay, we might actually flip over here. This might be the manipulation and then we trade higher. However, we actually continued lower and we traded into this point of interest, which is the daily fair value gap over here. That's when we flip. I would like a DXY long bias with this being the potential manipulation from last week because I had that bullish narrative. We are in bullish order flow creating new highs and I think that we are going to target further highs going into next week. I believe that this was a push down before a bigger run up higher and I think that the reason this move happened was to inverse basically anybody that's looking to buy DXY last week, including myself. So as you could see in the previous clip, I was talking about the manipulation on DXY. In simple terms, as I just explained, I'm just looking for DXY to obviously trade higher in the week. So I'm looking between Euro and GBP. At this time on the Friday, I actually decide that I would like to swing trade this right off the bat. I'm looking at the daily candle, I'm thinking, well, if I do believe that this is DXY's manipulation low, then I don't think DXY is gonna go much lower than this. And if it does, then I am completely wrong. So every trade starts off with acceptance to be incorrect. And I believe that this is a good shot to take based off of DXY going higher. And if GU goes any higher than here, I'll actually give it some breathing room. But if it goes any higher than here, I don't actually believe I should be in this trade anymore. So in reality, where I take the trade is around here. I remember it was about 151, and we can have a look to see if that was the case. But yes, I took the trade from around over here, and my stop loss is around over here. As you can see, I'm targeting around over here, which is exactly the same highs that we have on DXY over here. It's relatively the same thing. As you can see, DXY to go for these highs is mimicking GBP USD to go for these lows. Same sort of target. So that's it. This is how simple swing trading actually is. I'm in the trade. I believe based off of this daily candle that we should go lower for the week. People, you don't really need to overcomplicate how you trade. That is all I need to do. Yes, I have had to wait all week for this setup. Yes, I might have had to wait 11 days for this trade to play out, but I'm protected in the market. I can go in with a real conviction, a real plan, and the next part, which you'll see in this, is that I can even scale into the trade to make my overall profit a lot larger. This is what we have ended up doing. We have entered on the trade, and it is Friday. We like the way that the daily candle's closing. We want to see how price reacts. Obviously, we have to wait till the weekend is over now, and we'll see what happens when we open up on Monday. And as you can see, this is the Monday. So we've opened up on Monday, and at this point, we are just trading side by side sort of thing, okay? So as you can see, this expansion happens over here on the 4-hour chart, and this is the exact point where I'm actually looking to scale in. Now, you might be looking at this trade and just going, very low risk to reward, you're only making 1.76. Now here is where it gets very, very interesting. What I have done at this point is moved my stop losses all the way to here, and you'll be able to see this. I've already made a live video, and I'm going to insert the clip where I actually scale into the trade. So you'll see that right now. And we go all the way into profit, and I do nothing because I know that at this point, with the amount of positions that I have, this is enough risk that I'm willing to put on that I don't actually want to lose any more. So when price comes into here and here, I'm not deciding to do anything else. Now we've had a massive move. And if we look at the daily candle, this is what the daily candle looks like now. And we've created a massive daily rejection over here. We had a big move today, which is GBP CPI. And we went very, very close to our actual targets over here. This is a 170 pip move, which is massive. Unfortunately, people expect a 170 pip move to just be a drop. This is finally where all of these SLs are actually moved because of the move that we've actually had. So now when I scale in like this, because we're actually retracing, I can have a 70 pip SL and still get 1.72 risk to reward. These ones, this one firstly, SL is actually in profit. Second one, SL is very, very minimal. And the third one is a minimal risk trade. So now risking $1,000, I'm going to make 1.7. I'm not risking $1,000. Just say risking $1,000, 1.7K. If I lose the whole trade now, I'm only risking 1%. And my total gain will be incredible. So as you can see from that last clip, where I was in the live market with a live example, just explaining why I have scaled in here. So you'll have understood why I did it from that actual example. But again, just for a little bit more context, this is the point, again, just like I showed you with the daily candle, exact same things going on the 4-hour candle. Here is the point where nobody wants to scale in, nobody thinks GU is going any lower. Just imagine it. You know what's happened after. This is the problem with people looking at old charts and back testing. Obviously, to an extent, is good. But when you see it afterwards, it's like, oh, well, I knew that was going to happen. Well, of course, because you knew it was actually going to happen. It's not the live markets. In the live markets, you could see the confusion when the market is dropped like this, and then the market basically eats up the whole displacement throughout the next 4-hour candle. You're like, people start to panic over here. I'm still with the consensus of my actual whole daily buy. So if we go back to the daily, this is what I'm always doing, flicking back to the daily and weekly. I'm like, you know, daily looks fine. People are looking at price flipping bullish over here. Look at the actual daily candle, and I do this multiple times when I'm in a swing trade throughout the week. Looking at the daily, does anything actually need to be changed here? We're still in bearish order flow. Okay, we've still got this high. I'm in so much room of profit. Why don't we scale into the trade? And that's what we've done. And I did it at that point because that was the point that actually made sense to scale in. If I scaled in over here, for example, I could not have had a stop loss that made sense in terms of swing trading because I could be expecting a much larger retracement, which is why my stop was here. So after this, I'm just gonna let price play out. We've added another 1.7 onto the trade. We originally had around 1.7 as well. So now we've got a much larger trade. However, we can also play with the profit that we've got over here. And now this one actually ends up going to break even as well. At this point, you can see what price is doing. We go into profit, and then this is where the market actually is about to close. This is Friday at 9 a.m. At this point, I nearly get taken out of the trade. But this is why, again, on the swing market, just let price do its thing. It's either going to win or it's going to lose. My stop loss is over here. As you could see in the video, why I explained why my stop loss was over here in the live video as well, because I want to give a little bit of breathing room for this. And at the end of the day, this is our actual target. So that's like exactly what we've done. But again, unfortunately, the market's about to close for the weekend, and we'll see what price is actually going to do on Monday. So we'll let Friday do its thing, and then you'll see here is Monday. Monday morning is over here. Tuesday, we nearly again get taken out. So this was a point where I've discussed to you guys in the about the trade where I was actually running $16,000 at a point over here. Over here, I've nearly watched half or more than half of my profits being wiped out in one single large retracement. Did I think about closing? I'll be honest, I'm a human being. I did think about it. You know what, is my bias completely wrong? But then again, I have to tell myself, my bias cannot be wrong until I'm actually stopped out of this trade fully, because my stop loss at this moment is in validation. Finally, at a point over here, when we finally get this larger displacement over here, I've now moved both of my positions to risk-free, and we end up actually hitting my take profit on that day over here, as you could see. This is how I closed out my $18,300 trade on GU, and this was part of my biggest trading week ever, which was a $45,000 week. This should clear up how to actually swing trade, why I swing trade, why I'm looking at lower risk to rewards, and this is how you should do it. I hope you learned something from this video. Make sure to subscribe, follow my Instagram for all of my payouts. See you in the next one.